So, in the first session for this particular course, what we're looking at doing is obviously when you look at the level 3 diploma in business, this is a qualification which is, just equivalent to your A levels or just over A levels. And, the idea of doing this particular course and this qualification is to, look at a bit of a stepping stone, with regards to you moving towards, further to higher education, start of, say, for example, your university at level 4. So this is a bridge gap qualification between, level 3, which is between your A levels and level 4, which is the first year of your uni. Now, the business qualification in particular, is looking at the aspect of giving you some fundamental understanding in terms of, how you work within organizations. And when you work within organizations, the idea is to try and gain some knowledge by studying this course into understanding what, are the things which are genuinely involved in running of the organizations. So when you look at a business or we will use this word, which will, in terms of its meaning, it will change slightly depending on the context in which we are using this word. So when I say a business, obviously we use the word business, we use the word organization, we use the word company, and the three of these words in this particular aspect, when we study this course, would have the same meaning, but the connotation of the words will vary. So when I look at saying that we want to study organizations, that means you want to broadly look at how things work within, across the sector, whether it's business, organization, or a company. When I use the word company, you will look at understanding it from a context wherein we are looking at a particular organization, which could be, say, Morrison's, and that would be a company, which could be, say, Tesco, that would be a company. And when you look at using the word business, that means we are going to be talking in general about the sector. That means we are looking at, in general, the services sector, which employs a lot of people. We look at, in general, the businesses, which could be private, public businesses, which is the sector that we are talking about. So here, this qualification level 3 that we are looking at doing with ATHE is a bridge gap, it's bridging the gap between your A levels and the first year of uni. And the qualification essentially is looking at, giving you a well-rounded outlook in terms of, understanding how businesses in general work.
Okay.
So we are going to be studying 4 units, and these 4 units, are carefully chosen and picked up from the fact that they are going to be looking at 4 different aspects of you understanding how businesses work in general. So the first unit that we're going to study, which is 3.23, is primarily looking at how businesses operate. That means once you've formed a business, once you've started a business, how do we look at key things like ownership, the operational issues, look at, a bit on in terms of understanding how finances within the business come in. And then at some stage, we look at resources. The second unit that we will study is primarily looking at marketing. That means how do you market your business? How do you position your business? How do you segment your products and things like that? And the other 2 units that we're going to be studying are primarily going to be general units, but they will specifically give you knowledge and insight about when you use and study them at level 3, but you will also use them in higher levels when you go and study in uni. So one of the units that we're going to look at is academic and research skills for business. And this particular unit will help in developing fundamentals of how do you look at doing research. Because most of the courses that you're going to do from now on, or the studies that you're going to do now from up till, higher education, is going to be all assessment based. That means you might not need to take any examinations, but essentially you're going to be writing a piece of academic work or producing a piece of academic work, which is going to be assessed against a criteria. So this unit, which is the third unit, is going to be teaching you in terms of how to look at doing research. When we say, if you want to find information from the internet, from Google, from books, journals, and in general, give you and broaden your horizons in terms of understanding knowledge-wise the areas of research, whether we do primary, secondary, and tertiary. And that unit is going to then have applicability across when you study further at level 4, 5, when you do projects and things like that. And one of the other units that we're going to study in this particular course would be looking at communication in general. How does communication work within business? What is its role? Types of communication that we will look at, whether it's formal, informal, written, verbal, body language. So we look at this bit, which helps you manage resources. And in general, when you work within an organization or when you work in a business, you have lots of people working for you or working with you. Okay. And one of the key aspects that you look at in this particular unit would be how do communication skills enhance your business and the output or productivity in your business. So the careful selection of these 4 units has been done from a point of view of looking at 2-3 objectives. One is it should give you some fundamental building blocks in terms of developing referencing, academic, writing skills for further education when you study further, research skills when you look at doing further studies, and then some of the other units which are broadly focused on making you aware of the various types of functions and key departments within business sector, business as a sector in general, so that you have a holistic understanding of understanding how businesses operate, work, how they we look at ownership and a couple of other issues related to this sector. Is that okay?
That's fine.
So what we are going to be looking at doing is obviously in this particular first unit, we are going to look at starting off with understanding of how the environment in general, factors which affect the business, whether it's from internal or the external factors which affect the business, and how the formation of business happens is what we will start to study in the first learning outcome. So for this, in order to go through some of the key concepts and the terms and terminology, what I'm going to look at is send you at some stage after the discussion maybe a handout, which is a word handout, kind of summarizes the ownership of businesses or the companies that we look at. And the other bit that I'm going to send out is primarily a PowerPoint presentation, which will give you insight into the types of different types of organizations which are formed within the private and public sector.
Yeah.
So let's start off with in particular understanding different types of organization. Is that okay?
Yeah,
and
fine.
For this, give me 1 second. I'm just going to unshare the screen for a minute. Types of organization. What I'm going to do is actually look at a simple. I'm going to send you a presentation in any case, but let me start off with something which is much more basic, so that you are able to. I think during our discussion we'll be able to correlate to this much more easily. Just that's a relevant one, which I think what I want to do is basically look at this one, which is going to be much more relevant. So here we go. So what I'm going to do is obviously this I'm going to send you 2 presentations, but we are going to discuss from a point of view of doing it here on the session. We'll discuss a shorter version, and I think I'm going to start off with the fact that we look at a few basic questions like what is a business, what is its purpose, okay, just to get into a bit of discussion. So when we look at I'm going to try and minimize this for a minute. So when we look at the purpose of understanding what is a business, what do you think? What comes to your mind when I ask you this question in terms of what is a business?
Well, a business is something owned by someone.
Yeah.
Probably most likely like a family. Someone's invested.
Right. So when you look at yeah, you're absolutely okay on that. What you said is, so when you look at a business, what we are looking at is, we are primarily, if I just look at concentrating on the word business, we are looking at understanding something like what is what is the profession, what is your occupation. So when you ask somebody a question in terms of what do you do, you might have an answer which will come back to you and which will say that, okay, I have my own business or I work in a business. And that would imply that, the person is trying to say that I work within an organization and, I am by profession a businessman. So when we look at the activity, the activity which the person does is the person might be involved in an activity which generates, some sort of product or services. And the generation of these products and services is basically nothing but, some sort of a business. That means it's some sort of a template, some sort of a function through which you are able to generate some products or outputs or, services which consumers actually look at using.
Okay.
Isn't it?
Okay. Yes.
Right. Business could also when I ask you this question, if we look at this in a bit more creativity, is that what is business? Business is nothing but a commercial activity. It is a commercial activity which is done by a set of individuals to produce a particular output, meet an objective, but at the end of it, it also produces profit or also creates profit or money, in terms of, as an activity, as a byproduct of that activity.
Yes.
Would you agree with that? Yeah.
Yes.
And when you look at, wait, what were you saying? Sorry, go ahead. Yeah. And in terms, to a certain extent, when you look at, what is the purpose? I think when I mentioned the, the context or the term that it's a commercial activity, I think the purpose of that business becomes that, you're a charitable business, you are a business which basically works with the government, it's non-profit. That kind of a purpose defines, that is the, answer to the question in terms of what is your purpose. Are you looking at generating profits? Are you working for charity? Are you going to help in general, the humanity? So businesses have different reasons. Businesses can have different definitions, and also they can serve very many different types of purposes. And that is what we'll get to see when we come to ownership. So just to give an example, what are the types of businesses? So for example, when you look at Walker's crisps, we're looking at, one of the biggest companies which produces these as a brand. And this is for them a commercial activity because they sell these products and services, the crisps, and people buy it, and because of which the company makes profit. When you look at the Manchester College, for example, this is an institution which is a further education college, publicly funded, but at the same point in time, their main aim or main purpose of, obviously they're also business, but their main and purpose is that they're an institution which teaches students, or it's an institution which is involved in the delivery and, delivery of teaching and learning. Correct?
Yes, correct.
You could look at a large company like McDonald's. Now they are in the, fast food sector or in the services sector, but they employ a lot of people, but their main business is, in terms of food. So they are a fast food kind of a business. And when you look at Comic Relief, this is a charitable business. That means, this particular thing, in terms of as an activity, it's a registered charity. They do some events across the year, and obviously, the Red Nose Day that we look at, it ends up generating a lot of money for charitable causes. So there are different types of businesses. Businesses could be set up for profit, could be non-profit making, which could be charities. They could be commercial. They could be non-commercial. That means they work with government and departmental and other kind of agencies. And at the same point in time, their purpose could be different depending on the area or the sector they are in. Correct?
Okay, correct.
Now, let's look at how do we define a business. Now, the layman's definition of what we defined was, very close to when we said it's an organization that produces, basically produces goods and services, right?
Yes.
So a business is a fundamental, what is the purpose of the business? It's a fundamental aspect of producing goods and services, and any such organization which is involved in that process of producing goods and services or offering goods and services would be classified as a business organization. Correct? Now, in terms of when we say, a business produces goods or services, so when we look at, say, for example, the previous slide, when we look at McDonald's, what is the goods and services it provides?
Food.
Food. And when you look at the Manchester College, for example, it provides
Education.
education. So in terms of depending on the type of business and the activity they are in, they could then have varying types of goods and services which would kind of be used by people.
Yeah.
Now let's look at what are the objectives of businesses. Why do you think somebody sets up a business or sets up an organization which kind of produces goods and services? So some of the main objectives that you could look at would be things like, if I set up, say, a restaurant business, my main objective would be that apart from it being a livelihood wherein I go and set up a business, what I'm looking at the end of the day is the restaurant producing profits. That means it is able to offer services of wining and dining, but at the same time, these services, when I'm providing, my aim is to, at the end of the day, make a profit from it. That means I should be having enough savings, which would be classified as something called profit.
Yes.
Some of the objectives of businesses could be that, a lot of people during the financial crisis, which was the 2007-2008 financial crisis, a lot of people were made redundant, because of losing their jobs and, obviously companies, demand and supply in the market going down. So a lot of companies ended up, laying off a lot of workers. So having said that, a lot of these people who got made redundant or had severance packages received, what they did was they said, okay, enough's enough. I'm not going to now go and work for anyone. I'm going to start my own business. And one of the reasons why they started their own business was because obviously they want to earn a livelihood. They wanted to have something in terms of continuity. So what they said was, okay, I'll start my own business with the severance package I've received or the redundancy pay that I've received, and that would help me have something of my own, isn't it? So
Yes.
that could be one of the reasons why sometimes you see businesses are set up, is because they are set up from a point of view of survival. That means it is to do with the fact that people want to have something of their own, which could, give them income, but also give them a purpose for them to be able to, survive. Sometimes you look at businesses because, so there are various reasons. So sometimes it could be reasons like break even. You look at growth, and obviously you look at providing a quality of service. Can you think of a reason why you would open a business which would be, looking at having one of its fundamental objectives as being growth or break even?
Make it grow larger.
Yeah, literally, yes, what you're saying is correct. But in terms of, when you start a business, what you do is you set some short-term goals and you set some long-term goals, isn't it?
Yeah, that's correct.
So when you start a new business, your short-term goal could be to make it profitable or to make it viable, as we say. And viability means that you want to make it self-sustaining maybe in 6 months' time.
Okay.
So that kind of an objective that you set is you're looking at setting something which says, okay, I'm putting in some savings, and at some stage I want this business to start generating money. And at some stage when it starts to generate money and you're able to take that savings out of the business which you had invested, would mean that you are at a stage wherein the business has a break even, isn't it?
Yeah, that's correct.
So when you look at a lot of manufacturing organizations, when you look at a lot of service sector organizations, even when we look at examples of sticking to a restaurant, you would at some stage do a calculation even before you start the business, saying that, okay, I need to serve at least 5 to 6 customers a day for me to be able to generate enough money wherein the business would actually break even. That means I'm not spending money from my pocket or putting my savings in, but the business itself is able to generate money for it to be able to sustain itself. That is the word, the meaning of the word break even.
Okay.
Okay. And then what you do is you set long-term goals, saying that, okay, I'll start a business, I'll give it about 9 to 12 months. And after that, I'm looking at, growing the business to be looking at making it much more profitable and maybe open a second, branch of the restaurant. I have one, for example, in Rochdale. I might want to open one in Oldham because of the fact that, the business is booming. And at some stage, I'm setting some growth targets for the business.
Okay, that's cool. Good. That's cool.
So basically, the idea of this is to understand that when you start something, when Tesco, for example, as a business started, in the early 1920s, when Cohen started that as a family-oriented business, he had a small grocery shop wherein he used to do some buying and selling. But slowly and gradually, the business which he started off, he kept, kind of moving his goalpost and kept increasing the objectives of the business. And at some stage, if you look at, a few years down the line, today the business is a multi-billion-dollar business or a multi-billion-pound business. And this business now spans its operation in about 12 different countries. So
Yeah, that's cool.
when you start an activity, you are looking at, putting some objectives. And the reason of starting starting a business or putting these objectives is to have some sort of a moving goalpost, which will help you, shape or basically grow the business. So these could be some of the objectives that, sometimes you have to keep in mind when you start an activity, which could be commercial, and that commercial in nature activity is termed as something called business. Okay.
Yes.
Now, let's look at a bit of a classification. Now, I know that when we look at businesses, a lot of us, sometimes when we set up a business or set up a company, now in this case, I'm going to use a word, company, and the context would change slightly, as you will see. So when I say, I'm going to start up a company, that would mean that when I say I would start up a company would mean that I'm going to start a business, and that business is going to be registered on the basis of ownership. So the structure of the business is going to be defined on the basis of its ownership. So when I say I'm going to start a business and I'm going to be the only owner or director of the business, then that business could be termed as or classified as something called a sole trader, because you are the only employee, you are the only owner, and at the same point in time, you are the only one who's actually investing money into the company, and that could be termed or classified as something called a sole trader business. Okay.
Yes.
Now, the other bit that we look at is when we look at, say, for example, you start off a business and you have lots of money to be able to put in as seed capital or as something that you can invest in from day one. What then will tend to happen is that you will form maybe a company rather than starting off, as a sole trader. So what you do is, in that case, you want to hire a number of employees. Your business operations is going to be slightly larger than the remit of being a sole trader. And here, what you'll do is, rather than opening up a business in the form of partnership or maybe as a sole trader, you're going to be starting off by registering a company, and that company could be a private limited company, because the shares of the company are only owned by you or members in your family. And you might register it as a company, which is a private limited company, and that company will essentially be within your control, because the shares or the equity of the company or the ownership of the company is within your control only. And that is why we will classify it as something called private limited company. Okay. Sometimes, and the example that you see on the slide, so what I'm trying to come to is, when you look at the ownership of businesses, the ownership of businesses can lie in the hands of public, which means in the public hands. The ownership of business can also lie within private hands. That means it's owned by an individual or a consortium or a group of people. So in that case, it could be private, because you have no part of the business which belongs in general to the public. Okay. So when we look at classification of businesses, we define them into two types. One is public sector businesses, and the other is private sector businesses. So what is a public sector business? An organization that provides people with goods and services, but is financed, controlled, and run by the government. That kind of an organization or a business would be called a public sector business. And examples of that would be NHS, schools, police, the council. You look at organizations which basically are funded by the government, are essentially all public sector organizations. Okay.
Yes. Yes. Okay.
So maybe about 2 decades back, we didn't have privatization in the case of railways. So railways, when we looked at, they were public sector businesses, but because of the privatization, they were owned. They are now owned by companies, and the franchise is run by the companies like Virgin, Crossrail, and things like that. They are now within the private sector. That means it is owned by individuals, and the financing of that is not done by the government. Is that
Yes.
okay? So, by private sector businesses, the organization which kind of provides services, but here the services are not financed by the government, or it is not subsidized by the government. And those could be type of organizations like sole traders, partnership companies, charities. So when you see Comic Relief might get donations from members of the public, members of parliament, or members of the government, but they have no direct bearing on the working of the organization. So it is a charity, but it is also not owned, or does not get the only source of the source of money for that for that charity is not just the government, but it has various sources from which it derives its funding. And in this case, it is considered as a charitable organization, but it falls within the private sector, because Comic Relief raises money in general from members of the public, but they have nothing to do with being in the governmental positions, or office positions.
Yes.
See the difference? Now, when we do this classification, then we could have, we have this classification of business on a very macro, or a very, higher level, wherein it says public sector and private sector. So public sector draws pensions, private sector people also have pensions, but public sector is in general subsidized by the government, because the government pays the wages, and government pays the pensions, and all the other benefits which go along with it. So some of these people work within the department, but they are paid by the government, and their work might not lead to creating a profitable activity, but are classified as public sector, working within the public sector, is because they're financed primarily by the government. That means the wages, the salaries, and everything is paid by the government. Is that okay?
Yeah, that's okay.
Now, the other bit that we need to understand in terms of the classification is what is limited and unlimited. Why do we add the word limited to business, or why do we add the when we say some of the businesses, they are called LLC, limited liability company. So these terms is what we need to understand. So when we do the classification of private and public, that is understood. Now the second classification that we look at, and why do we look at calling them limited and unlimited, or limited liability company, LLC as we call it, is because when you look at risk and when you look at the liability, when you open a business, that means the company becomes liable. It is not the individual which is liable, but the company becomes liable. That means the risk of success and failure. If you've taken out a loan from the bank, and tomorrow if your company fails, or the business actually fails to make profit, then what is happening is the bank is losing money. It can question the directors in terms of the implementation and use of that money, but that recovery of that money cannot happen from the individual's personal property or personal savings, because this is in the remit of being as a company, as a organization, which is a commercial organization. So when we differentiate between limited and unlimited, what do we say is that there is a limited risk with the company, and there is an unlimited risk. That means the business can go bankrupt, and in that case the bank would recover money by selling the assets of the company, or the assets of the company's owners related to the company. Okay, is that clear enough?
Very clear, sir.
So when we look at using the term liability, and when we say liability is basically classified as a deliverable, or a receivable when you buy some goods and services. Then in that case you have to become liable to be able to pay for those services. So if I go to a shop, for example, and I want to buy, say for example, a coffee, if I get I'm ordering a coffee, then I'm liable to pay for the the cost of the coffee that I'm having. And liability in general classifies the business in terms of its characteristic. So when you become legally responsible for something, in the business, then in
Yes.
that case, business becomes limited. Okay. So an example of this would be that sometimes when you see small businesses starting up, what they do is they create private limited companies. That means if there is any liability, any loan, any debt, anything which the company has, it's going to be resting within private hands, which is in the hands of the owner or director of that company. And in that case,
Okay.
the company is called private limited company. Now, in some cases, what tends to happen is when you have a business which has been running for a number of years and has facilities like for example loan facilities, cash overdraft facilities with the bank and things like that, and if it is allowed to go unchecked, then in that case, at some stage, if the business becomes liable, that means it starts to lose money or it does not make profit, then in those cases, what happens is the company has unlimited liability. That means the risk at some stage is not just shared by the company, but by its owner and also its shareholders. And that would mean that all of them are losing money in running that business. So sometimes when we say liability, we have to look at how the business is essentially, legally responsible for something in terms of responsibility. And that is where the classification happens when we say limited and unlimited. Also something which is called limited liability. Sometimes you will see the companies when they are formed as LLCs, which means a limited liability company. Now, this is an entity which is set up wherein the members of the company cannot be personally held liable for company's debts or liabilities, right? So sometimes what happens is when a group of people come together, they form a company, they all are directors in the company, but what they do is they form a company which has a limited liability. That means if the business is to make a loss tomorrow, then the losses cannot be recovered from the personal income assets of the directors. Okay.
Yes.
So this, is something that we look at in terms of another type of, categorization. So we've looked at two. One is private versus public sector, and limited versus limited liability or unlimited liability companies. Okay.
Yes.
This kind of defines, not just the classification, but also the structure of ownership of businesses. So in order for us to understand how businesses operate, we need to understand the characteristics in terms of its ownership and also in terms of its classification, so that when you come across these terms in day-to-day discussion or when you read something, you're able to clearly differentiate in terms of what does limited mean, what does unlimited mean, what does limited liability mean. And when you say, and this is a public sector or a private sector organization, you're not just able to clearly differentiate, but you also understand the reasons of why they are classified as those businesses. Is that okay?
Yes. Yes. That's fine.
Okay. Good stuff. Now, when we look at, so taking this concept further, let's look at ownerships. Now, different types of ownerships. Now that we know the classification, now within them, you have something called the sole trader. Now, why is it a sole trader? Sole trader it's because, there is only one person who owns the business and they may have many employees, or he or she might be only employee. And that is the reason why it is a sole trader. So this kind of a characterization is basically seen when you have a small business like a news agent. It could be a plumber, electrician, somebody who's working alone, but also has the liability or everything, which is on his shoulders. And examples of these are, things like when you look at small businesses in general, like news agents, corner shops, hairdressers, plumbers, electrician, restaurants. These are all set up as sole traders because there's only one owner of the business essentially, and he or she actually makes the decisions. They're responsible for pretty much everything, in terms of arranging the finance. If there is a requirement of a capital or money which needs to be put into the business for investment, they bring it from their savings or whatever, and they are usually involved in working of the company more or less directly. Okay.
Yes.
Now, the second type of business when we look at is something called a partnership. Now, where do we look at partnership? Partnerships are where two or more people own a business. So when you think of partnerships, we think of shared responsibility. We think of money. If it is to be invested in the business, then all the partners have to put in the money because they want to be equal partners. And that is how partnership comes across. They at some point in time, will also have something called a memorandum of understanding, which is called MOU. Right? If you and me are to start a business, we might say, okay, I'm going to put in 10,000. If you're only putting 5,000, then I'm 50% owner of the business, or 70% owner of the business, and you are 30%, because the equity or the money that you're putting into the business is lesser as compared to what I'm putting. So I'll get more shares and you might get slightly lesser shares. And that is where partnership comes across, and where you have this as a partnership. What you do is to develop the understanding in terms of contract, what you have got in terms of roles and responsibilities. Most partners end up doing something called an MOU, which is Memorandum of Understanding. So here you will see that these businesses are though small in terms of their nature of work, but have large turnovers or have very many clients. So when we look at partnerships, we think of businesses like accountancy partnerships, accountancy businesses. We look at solicitor businesses. We also look at professional services, like when we look at dentists, doctors, GP surgeries. They are all kind of partnerships. Reason is, when you look at Price Waterhouse Coopers, essentially they were three accountants. So what they did was they combined the business, and obviously what they said is, because of the combining of the business, we become partners in the business, but also we are able to attract more clients. A number of years back, when Price Waterhouse and Coopers actually came together. So partnerships you get to see in places wherein you will see that they are generally what you call are services businesses, and this is what you get to see in soliciting, which is the legal profession, services profession, accountancy, and even professions like when we look at dentists and doctors or GP surgeries in particular.
Yeah.
Now the partnership has unlimited liability. That means because there are a number of people involved, at some stage the liability in the business can also be unlimited, because every partner is able to pick up some debt, or if the business is to make a loss, it can be divided amongst a number of people to recover those losses.
Okay.
And sometimes when you form these partnerships, what you do is you have a partnership deed, the terms and conditions on which your partnership was actually created. What are the key deliverables from each partner, things in terms of dividends that they will take, or things which the business actually generates they will take, will actually be all documented into something called a partnership deed. And then, because there are lots of partners, all of them share responsibilities, and each of the responsibilities the person is doing, according to which they take some sort of a remuneration or salary or wage from the business.
Yeah.
Is that okay?
That's perfect.
Now, the third type that we look at is something called private, limited companies. The word limited is related to limited liability. So here the business is owned by shareholders, and which has the three letters next to it, which is called limited after its name. So it could be things like, say, Hart Taxis Limited. It could be, say, A1 Poundland Limited, companies which have limited next to it, but that would mean that the business is owned by a number of shareholders. So it could be shareholders within the family. It could be a few friends who have started a business are also shareholders. And it could be, people who have come from different walks of life, have got together to start a business. And if it's become successful, what they've done is they've, had something called a memorandum of articles. And in those understanding, what they do is they write their, write the basis of their claim to ownership of the business. Now, private limited companies in general, one are, within the remit of mostly something called the private sector. That means they're not subsidized or financed by the government. That is why it is private limited, not public limited. And here what you will get to see is that most businesses over a point in time, when they are in doing a certain amount of turnover or certain amount of cash flow, what they will do is from sole traders to partnership. At some stage, these businesses will go and become something called private limited companies, because the accounts for them to be maintained are easier. There are restrictions and jurisdiction which they can easily comply with, and that also helps create shareholders of the company. So it becomes easy for them to borrow money from the bank. It becomes easier for them to be bound by regulation. And that is why sometimes you will see small businesses which are sole traders partnership, at some stage of the size of operation, when it increases, they become something called private limited companies. Now here, it could be what could be the examples? You're looking at, businesses like taxi firms, restaurants, or, even solicitor companies, accounting companies. They are being classified as private limited companies because they are able to have shares, and these shares could be owned by a number of shareholders. Okay.
Yes.
Now, when we talk about private limited companies, when we talk about, say, Virgin is also a private limited company, but Virgin is also a large private limited company because it has lots of employees, big turnover, operations in so many cities. So when we say private and public limited companies, it does not mean that they are small or big in terms of its operations. You can have, the length and breadth in terms of operations within private and public sector businesses, but the size of the business can vary within a private partner ownership or even in a public ownership. Now, when we look at public ownership businesses, we call them PLCs, public limited companies. And here the definition is the large business which is owned by shareholders. So is Tesco, according to you, a private limited company or a PLC?
It's a PLC, I think.
Yes, it is a PLC. The key difference between a private limited company and a public limited company is, if you see, in the case of a public limited company, the shareholders are many. That means you could have thousands of people owning the shares of the company, and the company is actually also trading on the stock exchange, like the London Stock Exchange. And that could also be one of the reasons why it is a public limited company. Okay, so here the key difference is the company's size and the scale is huge. There are lots of owners, and the owners in this case could be people who have shareholding within the company. So even if you have one share of Tesco, you are considered as a shareholder of that company.
Okay. Yes. Yes.
So the term public limited is used when we see a business which is usually large or a very large business. So when we say Virgin Trains, it is a public limited company because the shares of Virgin Trains are traded on the London Stock Exchange, and Richard Branson, as the owner, owns some majority stake in the company, but a large majority of the shares are also owned by the public.
Okay.
Correct? So Virgin Trains is not a private limited company. It is a public limited company because of various reasons. One, the shares are owned by a lot of members of the public. The main shareholder might be Richard Branson. He might have 20, 30, 40% stake in it, whatever. But the largest amount of shares or the stake is actually held within the public. That is one reason. Second is, it is unusually a very large business. That is why it is also public limited. And the third is, the company is trading on the stock exchange. That means the buying and selling of its shares can be done by shareholders on a stock exchange. And that is why also this is a public limited company. Okay. So examples of some of the public limited companies could be, companies like ATHE, Tesco, British Airways, Ryanair, and Barclays Bank, because they are not owned by one individual. They are owned by large members of the, by basically public, but large members of the public, and their shares are also traded in the market. Yeah. Is that okay? So in short, what we've looked at discussing in terms of, this is, we've looked at understanding the definition of business, types of business, and in which the classification of businesses, how it is done, and why is the classification done. And then we've looked at bits and pieces in terms of the different types of ownerships of the business and how they vary when we look at different types of ownership.
Yes.
Is that okay? Now,
Perfect.
today's session, what I've covered primarily is in this, learning outcome 1, we've covered the types of organizations found in private and public sector. We've also looked at why do we classify them as public or private sector organizations, limited or limited liability companies, unlimited liability companies. And finally, last but not the least, what are the advantages and having different types of ownership? Okay. So what I'm going to do is obviously stop here for today, and then I'm going to send a copy of this presentation to you and this particular handout, which will help you to understand, this particular learning outcome, task 1.1, 1.2, and 2.1, to be able to cover this off from a point of view of, understanding.
Yes, sir.
Okay. And the other bit which I'm going to do is I'm going to send you a small handout which will give you a bit more reading on the learning outcome 1, so that you are able to pick up a bit more detail for you to be able to write the tasks of the assignment when we come to that.
Yes, sir.
Is that okay?
That's perfect.
Good. Any questions on this so far?
No questions, sir.
Everything was okay. Were you able to understand the discussion in terms of the ownership and the types of companies today and the structure?
Yeah, everything was clear, but I'll also do my research.
You lost, sorry?
No, I said everything was clear, sir.
Okay, that's great. There's this slight bit of breakage which happens in the voice sometimes. I don't know why it's because, but I think it's to do with maybe the bandwidth on I don't know either side. So, but if you want to do a bit of revision, I can always send a copy of this recording to you. But let me send you this handout after the discussion today, and the copy of the presentation, and a bit of handout which will be about 4 to 5 pages for you to be able to read and get a detailed understanding of the ownership of businesses and the type of businesses.
Right, okay.
And that handout will directly be helpful for you to do the assignment tasks at some point in time later.
Okay.
Okay, brilliant.
Yes.
I'm also going to, one of our colleagues, Alex, will actually be sending you invites, for the next 4 weeks, in which we'll cover this particular unit. So make sure that as you've, accepted the invite just before the session, maybe an hour before the session, would be good and useful.
Okay, yes.
Okay. Thanks a lot for joining the session today, Qasim, and I will speak to you next week.
Okay, thank you very much. Bye.
Take care.